All right, today we're tackling a really interesting one, Quantum Computing Inc., or QBT. This company is a perfect example of a deep tech paradox. And believe me, it's a fascinating story, so let's get right into it. So get this, in just 1 year, 2025, QBT pulled in nearly $1.5 billion. I mean, that is an absolutely massive war chest for a company at this stage, especially given the shaky market. Capital like that really makes you sit up and ask, what is going on here? And here's the other side of the coin, the part that makes this a paradox. All that cash is set against a full year revenue of just $682,000. So the big question is, why are investors pouring literal billions into a company whose sales revenue wouldn't even cover a week of its expenses? That's the puzzle we're going to solve today. So here's how we're going to break it all down for you. We'll look at why investors are making this huge bet. We'll dive into the technology that makes it all possible. Then we'll get a reality check with the financials, see their strategy to scale up, and finally, look at the major risks they have to overcome.
Okay, so let's start right there. Why the billion-dollar bet? What do these investors see?
Well, the short answer is that this has nothing to do with what Qubit sold last year. This is a high-stakes gamble on what their technology could completely revolutionize tomorrow. You see, people aren't buying into a business model here. They're funding a potential disruption. And that disruption all comes down to one really specific advantage. And that brings us to their secret sauce, their core tech advantage, the fact that their quantum systems can operate at room temperature. To really get why this is a game changer, look at the difference. On one side, you've got the giants, think IBM, Google. Their quantum computers are incredible, but they're divas. They need these massive, complex, and super expensive cryogenic systems to keep them chilled to near absolute zero. QBT, they're playing a totally different sport. Their photonic approach works at room temperature in a normal server rack and uses a tiny fraction of the power. It's not just a step forward, it's a leap in a completely different direction. So what's the magic ingredient that makes this all possible? It's a material called thin film lithium niobate, or TFLN. The easiest way to think about it is like the perfect semiconductor, but for light. It lets them take all the bulky parts of an optical system, lenses, modulators, all of it, and etch them directly onto a tiny chip. This stuff is the absolute foundation of their entire system. And using TFLN unlocks some huge advantages. We're talking massive miniaturization, way better performance, and, of course, lower power needs. But the real kicker here is scalability. This is what could potentially let them go from a one-off prototype in a lab to mass production. It's the key to their whole plan. Okay, the tech sounds amazing, right? But promising technology is one thing. The numbers on a balance sheet are another. So now it's time for a cold, hard dose of reality with the financials. At first glance, you see a headline number that looks pretty good. Revenue grew 83% in 2025. You know, for a tech company, seeing an 83% growth figure is exactly the kind of thing that gets investors excited. But, and this is a really big but, context changes everything. That 83% growth only generated $67,000 in gross profit. Their margin just collapsed. And here's the real story. An operating loss of over $51 million. The core business is just hemorrhaging cash. And it gets even more interesting. You might notice the net loss is better than the operating loss, but don't be fooled. That improvement didn't come from the business getting healthier. No, it came from the company making almost $21 million in interest from its own billion-dollar bank account, plus some other financial gains. The core operation itself is still bleeding badly. So with a burn rate like that, how do you even begin to bridge the chasm between cool R&D and a profitable business? Well, that takes us to their strategy, getting out of the lab and into the factory. You know, for any company in this space, this is the great filter, the valley of death. It's one thing to build a perfect prototype that works in a pristine lab environment. It's a whole other universe of difficulty to manufacture that thing reliably, at scale, and for a price that makes sense. So what did Qubit do? They went shopping. They recognized their own weakness. They didn't have that high-volume manufacturing DNA, and they used about $110 million of that war chest to acquire a company called LSI. The whole point was to basically absorb LSI's talent and tech to build out their own large-scale fab. And that LSI deal came with a really nice bonus prize. Along with the manufacturing know-how, they got 23 issued patents. In an industry this competitive, that's a huge deal. It instantly beefed up their intellectual property, giving them a much stronger defensive moat. But even with a smart acquisition, the path forward is anything but clear. And that brings us to the final piece of this puzzle, the gauntlet of risks that QUBT has to run. And it is a tough one. Looking at this breakdown, you can see the biggest slice of the risk pie is geopolitical. Their supply chain for that critical TFLN material is heavily concentrated in China and East Asia. After that, you've got fierce competition, some self-admitted weaknesses in their own financial controls, and of course the ever-present fear that someone else's tech breakthrough could make yours obsolete overnight. And if you want to see just how high the stakes are, look no further than this. Management's own compensation target for 2026 is tied to hitting $30 million in revenue. To get there from where they are today requires a mind-boggling 4,300% increase in 1 year. That's not just ambitious, that's basically management saying 2026 is do or die. So, it all comes down to this one question. You have revolutionary technology and a bank account overflowing with cash, but you also have a ferocious burn rate and a revenue target that seems almost impossible. Can the tech translate into sales fast enough to outrun the financials? That, right there, is the billion-dollar paradox of quantum computing, Inc.